morning. Welcome to Pries Capital. You must be the new recruit.
Oh, is this the new recruit?
Yes, it is.
Awesome. Follow me, Mr. Superstar. Here at Pries Capital, we love showcasing art. The stunning bronze dragon sculpture Kiko by the renowned artist Nano Lopez is definitely a showstopper. And these pieces on the walls, the legendary Michael Godard is practically a rock star in the art world. There's art all over the office, creating a vibrant, creative atmosphere to work in and collaborate in. And here is Tyler Pries, our hardworking mortgage loan officer. If you're looking to purchase real estate in the Myrtle Beach area, Tyler's the guy to know.
Looks like you have your hands full. Ashlyn, can you grab a book for him? And I'll see you at the meeting.
And here's Raj, one of Jason's right-hand guys for commodities trading. Good morning, Raj.
Good morning.
Meet the new recruit.
Hi. Hope you like to work hard and play hard. This is a high-stakes environment. Split-second decisions can make or break an opportunity. Welcome to the firm.
Don't worry about Raj. He's a quiet powerhouse, but he's critical to everything we do here. And here's the founder and real estate powerhouse herself, Tina Price.
Good morning. How are you? So glad to have you with us. Can't wait to see you in action. We're just about ready to start the meeting for Jason's market analysis. I will see you both in the conference room.
Good morning, Jason. This is the new recruit.
Hey, welcome. We're glad to have you here. Your skill set is exactly what we need. I love people dedicated to their craft. But hey, I got to get ready for this morning's analysis, so I'll see you in a bit.
Thanks, Jason. You're awesome. Right here, we have one of our many conference rooms. And down the hallway over here, we have the intelligent and sharp-eyed Miss Jill.
Why, thank you, Ashlyn. Nice to meet you.
Jill thrives in the world of spreadsheets, balance sheets, and financial forecasts.
You'll fit right in, so go check out your new office.
And here's your new office. And over here, we have some welcome goodies for you. Just a small thank you of saying welcome to the family. Okay, so I've got to get ready for the meeting, but check out the gym over here, grab some coffee and bagels in this room to the right, and then I'll meet you in the conference room.
Good morning. Thanks for joining us. Go ahead, take a seat. Welcome back to another morning market analysis. Let's get comfortable and dive in.
Good morning. The market continues its steady grind higher and that slow, persistent climb that's giving us exactly the conditions we want heading into today's session. When you combine the strength of yesterday with the large range setting below us, the breakout pullback could turn into one of the biggest opportunities of the week. I'm seeing three distinct ranges on the charts this morning. And while several of them offer clean setups, there is one breakout pullback in particular that could be the difference maker for us today. Good morning and welcome back to another Team Day Trader edition of the Daily Market Analysis. Settle in, grab your coffee, and let's prepare for today's trading session. As always, take a moment to subscribe and explore the resources linked in the description below. Really quick on some shout outs. I see James in the chat and Robert. How you guys doing today? Anybody else wants a shout out this morning or say hello? Good morning. Throw it in the chat. With that said, I'll holler at you if I see you in the chat. Dashboard from Y Charts. Anything exciting in the news before we get into the charts? Right, I think everybody's seen on the charts as you opened up your software that you're using, overnight, a little bit to the sideways action, a little muted. Only thing I would, as I was looking through, there's not much as far as data that's coming out today. Really tomorrow is a little bit of some data I'm gonna talk about. I know the last time I seen you guys, I'm sorry, yesterday. Hey, how's it going, Earl and Lisa? What's happening? Tuesday, that word, that the thing that got stuck in my head was the Fed summary of economic projection. So we're gonna look at that today. That was on the tip of my tongue on Tuesday, and I couldn't think of what that was called. And obviously later in the day, I remembered. I was like, oh, that SEP. So it's the summary of economic projection. So I wanted to bring that up today since I did try to mention it on Tuesday. We're gonna look at that. But as far as economic data today, nothing that's going to be market moving. I would say this, as I was looking at earnings that came out in Kroger's earnings, and I was going to see if there's a trade set up later today, but I was watching this, and earnings came out, and she dropped all the way down to 62 pre-markets, trading right now at 65. So I didn't skim the earnings on this, but I'd really like to see, I'm going to look at that today, is what Kroger talked about, because whatever happened, those earnings came out obviously bad, or the market is not liking anything that's got said. I'd like to see exactly. I was expecting a little bit of a move higher on Kroger. I don't have a trade in Kroger, but it was something that I was watching a little bit today, coming into today. So I was watching that. Couple other things I was looking at as I was, looking at the commentary was Phillips. I thought this chart was something, again, actionable trade items, not necessarily a day trade, but more of a swing trade on some of these. Some of these charts look really decent as far as setups. So Phillips was a chart that I was looking at. And again, going back to that Kroger, I'm trying to think. I thought there was one more. Oh, I was looking at, I'm not a fan of these clothing retailers, but this American Eagle, I thought this chart very clean in a breakout pattern. Looks like an ignition bar. So again, anybody is looking at the day trade setups. Day trade setup number 7. Yes, 7. You'd think I'd have these memorized, but so much is in my head. 7. That looks like a good ignition bar that's coming out of here on AEO, so American Eagle Outfitters. I really like the way that chart's setting up. So again, just kind of highlighting a couple of charts on my mind. I figured I'd share what's going on in my head with everybody here on the stream. Other than that, that was the only thing as far anything news related. Again, I'm still, this whole WTI CL crude futures, still I'm finding myself swing trading this where and I'll get to the charts on that, because I do want to look at that, and I want to show you guys how I'm trading crude right now in this descending channel. And so I have been swing trading this over the last basically good month, and really looking for that breakout in oil. So I'll show you guys what I'm watching in there. Let's get into the Fed. I think we've all, I do this every day. This is just a habit of mine. I'm constantly looking at the Fed watch tool. So again, I'm sharing with you guys my habits on a daily basis. So I'm always looking at this every morning. So again, 89.2% chance of a cut. The market has that, figured in. I think last week proved it. There was that switch, right? I think before last week, before Thanksgiving week, we were watching that, and there was more of a keeping rates the way they were with no cuts. And then as the government opened up and some data came out, right, then they were pricing in cuts again. And I think that really, showed in market participants as last week, right, that kind of large move up in the week. That was really just a move where market participants are, right, factor in that those price cuts. Again, the Russell just went ballistic on a move. So these rate cuts, the market's liking it. And so I think that's the biggest thing. I think going into next week, and I'm sure I'll highlight this one more time before the rate cut, but I'll just mention this because this is what I was thinking of on Tuesday. Right, so we're going to get a new SEP on Wednesday of next week. And the thing that I believe we want to focus on is that projections, how much does this change going into 2026, right? What we're looking for is, if you look here in 2027, they have 3.1 priced in on the target for the cuts or for the interest rate. I'd like to see this kind of shift over to 2026. I think that's, I believe that'll be a little bit more of a, kind of a bullish play going into 2026, where there's that some additional cuts that are going to be priced in that are not priced in right now. If we go back to, right, the probabilities, right, you just have, the cut that we're going to get, and you got one cut that they're kind of looking for in the middle of the year, and then really you just got this, right? So we're going to have one cut, two cut into middle of 2026, and then this third cut going all the way into 2027. And this is the shift that I believe we're going to want to see going forward, is does this shift over and we get a fourth one, right? So how does this play out going into, the 2026, 2027? And I think we're going to get a little bit of answers to that question on Wednesday, and this will be, right, that these projections will be. The other thing that we'll want to keep an eye on is this dot plot, right? So where does the shift in the dots come into play, right? So as we get into 2026, right, how do these dots come into play? Does all of a sudden market participants kind of move here and we get, right, some of these dots is they're expecting a little bit more price cuts going into that 2026, 2027 year. And this gets more, what's the word I want to use? More defined as far as what a majority of the group of participants. When you look at these projections, yeah, there's a little bit of the belly down here at that 3-1, right? But, you still got, it's still almost an equal distribution. So I'd like to more see that belly of the distribution curve kind of be more filled in and compressed, where more of the market participants all have this similar idea moving forward and less scattered. So that's what I'm going to be watching for, and we'll talk about that. But, just as I'm, again, sharing my views and my, how I'm looking at things, sparks your curiosity and hopefully dig into this a little bit more. But I'm definitely watching that going forward. Are we just still uneven about inflation, and so we're holding back and we're going to leave the economy a little bit, still keeping restrictive, or are we still going to kind of follow through on this easing campaign? So with that said, let's get into the charts, because that's where we make the money every day, right? Is day trading these charts. As of 7 o'clock, when I wrote the morning market analysis, we are trading at around 4.5 points. We are literally right there. So again, similar to the other day, where not much has changed in, it's almost 9 o'clock. So 2 hours, and we really haven't gone nowhere. There is a mild, at the time at 7 o'clock, 1.53% net long volume delta. That doesn't seem to be too much changed in the last couple hours. So it's probably around that same 1.53. We haven't really gone nowhere. So again, that equal distribution between net short volume and long volume probably hasn't changed. since then. We're opening in balance. It's crucial to understand where we're opening. Are we opening in balance or out of balance? And then the 10-day average to range is 93.25 points. Again, you know, this heightened volatility is given really nice ranges as far as intraday points. I mean, you should be making some decent money. You know, I just remember back in like 2011 or 12, or I don't know, those days were like a good day would be like 16 points, and most of the days was like an 11 point average to range. And so you were just, you know, just sleeping and trying to get 10 points. If you got 10 points in trading in a day, you were doing good. Because I mean, there would be days where like 7 points from the high to the low. It was horrible. So these ranges I appreciate as a day trader. You know, we make our money trading, and you gotta have the market moving. Otherwise, you know, it's very boring. So things to note this morning. Still fairly bullish. No change really as far as from last time I seen you guys on Tuesday. Yesterday's grind higher was aggressive, but it was controlled, and that's what matters. We're going to talk about that on the charts. Markets that grind tend to trap traders leaning the wrong way, and that's the kind of environment that we're kind of sitting in. And again, I'm looking at an ignition bar. This is where the ignition bar thrives. So day trade type 7. So we've already made it a significant move, obviously, from last week. And so, right, I don't like to chase the moves, right? But I am looking for, and I think yesterday was a really perfect example. I didn't trade yesterday, but I was obviously looking at the charts on my phone as I was waiting for the inspectors to do a couple final inspections on some remodeling that we're doing in the backyard of the house. So I was waiting for inspectors, so I wasn't trading, but I was keeping an eye on it. But I like that move, that liquidation break off of that Microsoft news yesterday, right at like around that 9 o'clock time. And right, they just kind of liquidated and you had a liquidation break, and then they grinded that thing up higher the rest of the day. That was just a mercy killing by the market, and hopefully you didn't get too chopped up in that. That was some rough grinding action. So, but going into today, that gives us information, right? So the plan today is going to be trading day trade setup type 5, which is a trade setup where you're opening in balance. I'm going to look for the trapdoor entry as to develop as price rejects the balance. And then as that plays out, right, I'm going to be looking for the ignition bar setup, and I'm going to show you a little bit of how that pattern sets up. The levels are going to be the same levels that we've talked about all this week. That 68, 10 and 3/4, right? Buyers still remain in control. I mean, we could get a nice pullback all the way to that 68, 10, 75, and on an hourly chart, right? These buyers are still in control. There's been very weak pullbacks to really get any good, like, juicy, what do I want to say, like, good swing, and I'm always thinking like on an hourly chart, right? A really good juicy pullback. The pullbacks have definitely been shallow. You've had to be fairly nimble and, sniper on your entries. So snipering your shots on the trigger chart has been crucial this whole week. So again, 68, 10 and 3/4, right? That low volume node is still in play. The upper low volume node is still at that 68, 65. So we're right in that area right now for the LVN on the hourly chart. So we'll look at that. And again, I think today's session, I'm looking for an ignition bar setup. It's type 7. I'd like to see this price get above 6,900 as we kind of shoot for the all-time highs. Anything a close below the 68.10 and 3/4 would definitely, right, kind of switch my mantra. Instead of buying the dips, I'd be, I'd look at, I'd have to see how that plays out in real time. But that would either put me in a neutral stance or in a stance where, right, I change from, instead of buying dips, I'm selling rips. So that's that. So let's take that off the screen. And I don't have anything to talk about as far as on a weekly chart or the daily chart that's anything of importance. So with that said, let's just get right into our volume profile chart, because this is where the rubber meets the road going into today. This setup here, right? Again, how do I talk about moves? And this is, again, just hopefully you start seeing these patterns. But whenever you get a sharp move in one direction, what kind of patterns do we look for, right? And so whenever you get a spike or a big move in one direction, let me change this color. I feel like that color is just not, right? So whenever we get a move in one direction, what is it that we're looking for, right? The market does these three things. Right? And so it looks like, right, we're making these lower or these higher highs and higher lows. Right? So this looks more like this spike into a channel. Right? So that's how I'm looking at this, trading this, is more of like a spike and channel pattern. So when we're looking at that, there's a couple things on horizontal levels. Right, we do know where this low volume node comes into play at that 68, 65. We know where this low volume on the lower distribution comes into play at that 68.10. We have this high volume node. We have this high volume node like I talked about. There was 3 ranges on the chart, and we got this upper one. And where are we? We're sitting right here at the highs. Now, as we open up into 930, the tempo and the reaction that we get here is going to be crucial, right? Because I don't want to just blindly buy right highs. We already talked about this before, right? You don't want to get into a habit of buying high, right? You want to get in the habit of buying low, selling high. At the same token, we do have a bullish bias into this, into today. The thing that I'm looking for, and again, the setup is day trade type 5, where we're opening imbalance. So I'm really watching the imbalance structure. And then you got the 20 period moving average. And what I'm looking for, you have this inflection high up here. And what I'm really looking for is we open up in the morning. And this has to set up fairly early in the morning. If we're going to get that day trade setup 5, we're going to find that out by the time C period. So we're going to have A, B, and C period. And by the time C period plays out, we should be on the move for the ignition bar by that time, right? If not, then, I would have to give, I don't want to say sellers, but you just don't have the buyers aggressively buying the market. And so what will happen is, if they're not going to jump in, you'll get a lot of late to the move buyers, and they'll get squeezed out of that position. And again, we'll just get another break. And what more likely set up just on today is if 5 and 7 don't work out and I'm wrong, then what will happen is those late to the party longs, those weak hands, they'll start selling. First the price nobody's buying it. So price, it's not that sellers are going to get active. But what happens is you just don't have initiative buyers buying anymore. And so price will start falling. And then as price falls, these weak hands will start, right? And again, there's old business and new business. And so all of a sudden, this old business that where they once were long will now start selling. And that will then start moving the price lower. And then as there's confirmation of that, sellers will then start piling in. You'll get, right, 0 DTE, option traders kind of coming in here. You'll get managed futures. Any of us traders manage futures, right, taking trades. And you'll get some volume, some initiative selling coming in here. And again, to kind of take this market down. And if that happens, right, we probably will take out that 68.10 as that move will kind of come into and retest this lower distribution. And then that'll be the nice juicy pullback that really, would be the thing that we're really looking for. I mean, that's what I'd like to see. Like I said, the market just hasn't given us, right off this spike, hasn't given us a really good juicy pullback. We've kind of had to trade these shallow pullbacks, which, when you're in that trade, you really got to be watching it, right? It's not like, hey, I can set the position, go to lunch, or, take the half of the day with the position on and just dink around. You have to actively be in front of those screens, because at any moment, right, like you're buying on the higher end. And so it warrants risk. But, so I am watching that. Now, that's if I'm wrong. Now, being right, this should hold that 20 period moving average. This should build pressure. And then what's going to happen is by C period, you'll get that pressure to release. And you'll get an ignition bar up. And then you'll get another hourly candle and another one, and we'll kind of get ourselves up and in this, say, 69.20, by more than likely 2 o'clock. I mean, that's the ignition bar setup. It's an explosion bar, right? So when you think of that explosion bar, this move will have some momentum and some push. And so, right, you're going to get, this is usually a 3-bar count on the ignition bar, and you'll get this move up and around. So, I'll be targeting that 69.20 will really be the target as that plays out in real time. So again, we've talked about if I'm wrong, but if I'm right, then what we'll do is we'll compress, and then it'll release, and it'll be, you follow the trend. And then, I would not look at any resistance. There might be like a small resistance up here at this inflection point, which is around that 6,900. But I would not short that. At least I'm not shorting it. You can do whatever you want. I'm not going to short that, because what you'll get is players that don't know what's happening, rookie traders, yada yada. And they'll try shorting that, and that's not a short. This is not a short. You really want to, if you didn't get long, it'll just be one of those things where you don't get long and you don't want to short, but it's hard to chase. And so, you'll probably have analysis paralysis and not necessarily take a good trade, or you'll make a couple mistakes because you'll feel like you didn't get the long and you missed the long entry. You don't really want to chase, and so, psychologically you'll be like, oh, well, I'll just short some pullback and, try snipering some scalping trades, which probably you'll get chewed up, chewed and spit out with like a death of 1,000 cuts. So, just kind of, hopefully this is helpful in giving you that kind of understanding how this, everybody's been waiting for a pullback. I mean, this is definitely like market psychology 101. Anybody who missed last week's move, they're sitting there waiting, like, give me a pullback, give me a pullback. And then you don't get one, and you get these really short, shallow pullbacks, and, you're sketchy on the long, and you just can't get, you're trying to maybe short, but you're not getting any good move, any good follow through. And, then all of a sudden you're shorting up here thinking, hey, I'm shorting at the high, but they just railroad you and take that up. And that's that pressure that I'm talking about, is they don't give you a juicy pullback. So then you're just thinking, well, they got to pull back, and you really want to be long, but it's a bad trade location and they're not giving it to you. So psychologically, you're just like, well, fuck it, I'll just short it, expecting a pullback, and then you don't get it. And then this happens, it compresses, and then they railroad you. And right, everybody who's short unwinds that position, right? If you're short, that's old business, you have to get out of that trade and you have to go long. And then that's the squeeze. I mean, that literally is the squeeze. So that's how I'm looking at that. Let's look at that on a faster time frame. So we'll look at that really quick, just so you guys can see, because usually I do these things with you guys. So let's go to this chart here, just to show you guys the weekly distribution. So again, this is compressing, right? There's a lot of pressure in here at that top, right? This is last week's distribution. This is this week's distribution. Today's Thursday. So again, this is 4 days of trading, if you want to even count Sunday evening, right? So we had Sunday evening, overnight trade, Monday, Tuesday, Wednesday, and now we're getting into Thursday. Look at this compression, right? It is just compressing in a longer term view, and that pressure builds, and you're going to have an explosion one way or another, right? And because that, you just haven't seen that break of that 20 period moving average on the hourly chart, I just think we're just really that squeeze is getting tight, and I just want to go with the trend, and this move is bullish as of in the now. And listen, if sellers, I'll make this point, if sellers were going to become active or buyers were just done with this move, yesterday was the perfect opportunity for that to happen. You had Microsoft, the news came out 9 o'clock, you had this big liquidation, right? It could have pulled up and sellers hold a pullback, and then another leg lower. And that didn't happen, right? It was a hard grind higher. That's the market telling you, right? There was an opportunity to be laid out, and they didn't take advantage of that opportunity. I mean, there's been a few of them this week, but definitely yesterday, I mean, that was the end-all be-all opportunity, and that didn't happen. So you cannot come in here and be like, oh, I'm going to be this short biased, bearish mantra. They had plenty times this week, even Mondays, Sunday came in, the market opened up on Sunday, it dropped, right? They couldn't really hold it. They couldn't take another leg lower from Monday going into Tuesday. Tuesday, we talked about that. There was a nice triangle compression. Consolidation. And then yesterday, I mean, that was like a gift if the sellers were going to do it, and they didn't do it. So you cannot come into this market, kind of holding that bearish bias. You have to, let the charts tell you. Going into the market profile, again, this segregating the profiles into days. Again, this was last week, Thursday, Thanksgiving, or not Thanksgiving, but the Wednesday before. Right, this was the Friday session. Oh no, this was Thursday session. I'm sorry, this was Wednesday, this is Thursday, this is Friday of last week. Monday, Tuesday, Wednesday. So then this is this week, and look at what you have is, you have value on Monday, you have overlapping to up value on Tuesday, and again, Wednesday, yesterday, again, some more overlapping to up. So we are, right, again, that when you think of an uptrend, right, it's this thing. And that's what again, the market, all your charts are just, reiterating the fact that buyers are still buying this market. You're still getting a march higher. The pullbacks are shallow. But again, value keeps on marching, overlapping to higher. So going into today, again, just more reiterating, I'm going to beat this horse to death. You're going to get sick of me talking about it. Is I'm just trying to show you many different looks at the market, how I'm looking at it. I don't have 8 monitors on my desk to, look cool. All of them are specific in, many different ways to look at the same instrument so that I'm getting more and more confidence in how I'm looking at the market. With that said, let's look at the trigger chart and we'll close with that. It's already 9:03. We do have a VPOC sitting above us at 68.78. I'm definitely expecting that to get hit today. And if we were going to zoom in on this price action, again, if I was here with you guys yesterday and I saw this, this is would be the thing. You'd see this liquidation break, right? How do I always tell you guys? Whenever there's a breakout of any kind of, the one thing hopefully I articulate and you learn is whenever there's a move and there's a breakout of a range or an area and you break out, right? There's this pullback and then the move continues. The market constantly pulls back. And that's the confirmation. That's that kind of confirmation bias that the trend is still in play. You break out, you pull back, you hold a pullback, you break out, you pull back, you hold a pullback, you break out, pull back, hold a pullback. Right? So if this yesterday, and so I know I'm, just trying to help you guys understand what should have happened. If this happens, then this should happen next. Always think if, then. So if this happens, then this should happen next. And so if buyers were done and they said, hey, I'm getting out of my position. This is old business. And so they're getting out, they liquidated, then, right, it pulls back to the 20 period moving average. Even if you get a little poke, like this little poke, then you should have another move lower, right? So if this happens and if this is for real, the confirmation that you want is the hold the pullback and then another move lower. Right? And that didn't happen. Right? You kind of came in and by the time 10:30 came around, look at that 10:30 bar comes in, right? And they just push that up, right? And then it consolidates, and then another push up. Here you have, this is a beautiful test, right? So breakout, pull back, intraday, two try test, same level, right? That's responsive. This is called responsive short-term traders. You know what I mean? Nobody, how do I want to say this? Institutions, you're not going to get like Yale Endowment is not trading on a 5-minute chart. They're just not. Big institutions are not trading 5-minute charts. Idiots like us, or idiots like me, I don't want to call you an idiot. So an idiot like me, we're trading, right? We're day trading, retail traders, small traders, and what are we all looking at? We're these intraday inflection points or levels, horizontal levels on the market. And so when you see this responsive by short-term traders at equal lows or equal highs and they hold it, that's just more fuel to, not more fuel, it should give you like that confirmation, that confidence level that, you know, if you were long, say you stabbed a long in here, right? And right, you're not getting right, you're moving your stop up, right? And then you get this move and that holds. I mean, that's like an add-in. That's an add-in trade. You add into that strength to take it for an end-of-day rally. And that should give you the confidence that, all right, confidence, end-of-day rally, you're going to get, this is midday, and that holds. And you, in that post on the chart, and you vividly see it, that's like that confirmation to then you're good. And let that trade, you know, kind of play out into the end of the day, right? Into the end of the day. So, as we look into today, day trade type 5, right? Moving in, and again, we're just seeing, we got what, 20 minutes before the market opens. Again, watch, right? On a smaller level, we're on 5-minute chart, breakout, pull back, and go. Right? It's that breakout pullback, and then on an hourly chart, you're looking for that ignition bar setup, that day trade setup type 7. So hopefully this is helpful in your guys' trading. Hopefully I'm explaining and articulating in a way that you understand. As we close, as always, right? If you're trading, you want to come by, stop by, see the office. Again, I can't say it enough that I always like to talk shop. I like to talk trading. Our address is right here in Myrtle Beach at 100 Sutter Drive. We're in Suite 101. Our office, our private equity, investment research, real estate, kind of right, the mother company is Pries Capital. You can check that out at priescapital.com. There's our office number. If you're a trader and you're looking at it, you know, got questions, this is our trade, you know, specific to day trading or trading, our teamdaytrader.com email, the website. If you're day trading, if you just want your, you know, not interested, Jason, in your private equity, or you're not interested in the investment research or real estate, right? If you're, I'm just here for day trading, then you can go to teamdaytrader.com. If you're interested in investing in real estate, I definitely would recommend, right? The wife has a real estate brokerage firm. I can't tell you enough, right? Having real estate in your portfolio to match other things in your portfolio, a good diversified portfolio, right? Gold, farmland, real estate, companies, you know, outside of just the you know, your kind of stock market portfolio, really makes a good, robust, long-term legacy portfolio. You can talk to the wife. We do invest in real estate. Again, just like I'm sharing you my knowledge of the trading and managed futures, I also, you know, we can discuss real estate investing, get a hold of her, and right, get a hold of us, and I'd recommend doing that as just something to think about. Other than that, you guys have a great day. If Robert, James, Earl, and Lisa, you guys are still on here and you got this long, have a great day trading, and as well as anybody else listening. And I'll see you guys tomorrow morning. Have a good day. Take it easy, guys.